All right, guys, Brian Macris here, and I got the pleasure of having Joe Gindi with me again. This is a little different topic that we have. One of the things that the segment ended with prior was he mentioned, hey, at his real estate company, the real estate agents are seeing that insurance agents are saying, hey, seller rentbacks can sometimes be a challenge. And they're talking about having the appropriate insurance on the home. It's usually designed for an owner-occupied home for someone who's going to live in it. And that binder might need a rider on it, a temporary rider, for 15 days or 30 days in case somebody does do a seller rent back and they want to rent that home back for 30 days during that transition time. The one thing I can say is we haven't had any challenges with it. I've done a ton of these over the last 20 years. All of them have been successful. Now, I need to knock on some wood, and hopefully they'll continue to be successful. But everyone has played well in the sandbox, and if 15 days turn to 17, I think everyone's okay. And if 15 is like, hey, we can move out early, and then everything's okay there as well. A lot of times an escrow holdback will get tossed in there, so they might set $5,000 aside because the sellers haven't officially moved out of the property yet. So if they leave furniture behind, they don't leave the home broom clean, because when you buy a home, you can do a walkthrough and it's vacant. So there are protections that are put in there. Our attorneys will help draft that up. He's got the attorneys in place. I've got the attorneys in place. So we'll help guide that process. Fannie Mae, Freddie Mac, FHA, VA all require that homeowner occupies that property within 60 days of the note date, 60 days of the signing date. So they're very strict on that, and that's what makes it owner occupied. That's why you're getting a much lower interest rate. So you're going to really want to try to abide by that rule and get out of there within 60 days and make sure it's broom clean, so you don't have any challenges with the person that you bought that basically sold the house to, but make that transition. But you do need to make sure your insurance company is putting the correct coverage on it, because it is going to be a tenant for a short period of time. But there are just definitely ways to navigate through those waters. We're still doing it. We're still doing it all the time. So don't be afraid. Make sure you've got a professional team behind you to help guide you through that process. The next thing I want to touch on is appraisal gap coverage. Okay, so I want to buy the house for 500. They listed it for 490, and I'm willing to pay 500 if it only appraises for 490 or $10,000 over. Are you seeing appraisal gap coverages? Have you written this type of a contract? And what's the risk to the buyer?
So we are still seeing that. That's definitely something we can use as a negotiation tool, especially if we're in a property that's going over asking, a hot property, just hit the market or something like that. So if it all comes down to competition, so if you don't have a lot of competition, you can make your offer tuned more ideal for the buyer. If you've got multiple people fighting for the same property, then you want to find ways to get your offer to be as attractive as possible. So with the appraisal gap coverages, so in that case, if you were to pay, you'd offer, hey, we'll pay 500 grand for the house, provided it appraises at that number, or we'll make up a gap of up to $10,000, let's say, or 5 grand, or whatever the number is that they're comfortable doing. So basically that means that they'll put down over and above whatever it appraises for. If it appraised for 490, like you were saying there, you got a $10,000 gap there. So they need to put down that extra $10,000 in order to keep that deal together. So the buyer's agreeing to that upfront, that they make up that difference. Of course, if it comes in lower than that, now you're entering a negotiation at that point in time with the seller to try to make the numbers work for everybody, maybe split some of the difference there or whatnot. But it's basically just pre-committing that if it does not appraise, you're willing to make up an extra $10,000 of that number to keep it together.
Got it. And when a customer's doing that, that's just extra cash out of pocket for them. It sucks, but if they were a cash buyer, they're probably not even doing an appraisal, so they don't even know if it came in or not. They're just, I love this house, I want to buy it for 500, and they don't know if it was going to appraise for 480, 475, 490. They're just paying cash. So they're almost looked at in that position right there that it is. Where you run into challenges is if it comes in at 480 and they're buying it for 500. Now we need to make sure that seller is still okay with selling it with $10,000 over that gap coverage, which would be 490. And what I've been finding is that contract needs to state buyer and seller both agree that purchase price. Because what if it came in at 400? Well, he might not want to sell his house for 10 grand over the 400. So the language in that contract needs to be very, very specific to make sure that both parties agree that if it does, or if there's a cutoff, where is that line that we're going to go back to the drawing table and see if we can kind of get to the table together.
Yeah.
So,
and that's why you want to be careful about how it's worded. So if you're
Yeah.
looking at that offer on the seller end, if the buyer's agent wrote in there that, buyer's willing to purchase the property for $10,000 over the appraised value.
Yeah.
If it appraises way under that number, if you're the seller and you've signed that agreement, you've just agreed
Yeah.
to sell it for,
Yeah.
if it appraises for 460, you're selling it for 470.
Right, so buyers and the
you got to
sellers
be careful
agree
about that. You got to
to
make
make
sure
the
it's spelled
adjustment
out
to-
as a gap. And
Yeah.
we try to be careful, not play attorney, but after you've seen enough of them, you can get the lingo down to make sure you do it correctly, which is why you need a good realtor and why you need a good
gonna
lender
say
to
that.
back you up
so
to
that's
make sure it's all.
so important to make sure that when you're structuring that offer, that you're meeting, that you have enough time for commitment dates, you have enough time for closing dates, you have enough time to liquidate your funds out of your account, enough time to sell your home, making sure it's under contract, enough time to make sure that you've been on the job long enough and we can have a pay stub. All of those things are things that are really important when you're going through that process.
Absolutely. Yeah, it's just kind of bringing it all together, and it's a big process, but making it all happen is what we do.
So we got Joe Gindi here, Brian Macris. We are trying to help guide you guys home. So if you got any questions, call us. Talk to you soon. Thanks.
Thanks.